Eigen. Welcome back, guys. Today we've got Liam, the founder of EigenExplorer, who's going to be talking about restaking in general and unifying this complicated ecosystem.
Welcome to EigenLayer Unlocked, an interactive educational journey through the EigenLayer ecosystem created by technical founders and builders for the entire crypto community. A special thank you to our partners, AltLayer, Polymer, Authentic, Skate, and Lagrange for helping to make this happen. Our goal is to raise the collective knowledge of the EigenLayer AVS ecosystem and unpack the technical designs of the top teams in space. Welcome to EigenLayer Unlocked.
Eigen. Welcome back, guys. Today we've got Liam, the founder of EigenExplorer, who's going to be talking about restaking in general and unifying this complicated ecosystem for a more streamlined process. Liam, welcome to the show.
Hey, Robbie, thank you. Thank you for having me. And today I'm going to really dive into the complexities of restaking protocols and specifically focusing on EigenLayer, obviously one of the major player in the space and the entity who coined the name restaking, right? And just kind of like to give you guys an overview of what we're going to talk about. I'll walk you guys through how your stake, from the perspective of the staker, gets distributed internally within a restaking protocol, and how they're flowing through operators and services, and highlight how restaking decisions are being rewarded, right? And we'll focus specifically on a design called operator quorums, or if you've seen EigenLayer's latest blog, it's being sort of upgraded or rebranded into operator sets, but similar concepts, minute sort of differences in terms of how slashing are being carried out, but we're not going to focus on those areas today. And as we'll see, this design, specifically the operator quorum or sets design, not only affects all of the participants, but also influences how incentives flow through the ecosystem. And the key point that I want to drive home is that not all restaking decisions are created equal, right? Different assets, operators, and strategies can yield dramatically different outcomes. And I'll show you guys how, at the very end, I guess, we at EigenExplorer are thinking about optimizing or simplifying the restaking infrastructure that makes it a lot more easy to use, and how to make the entire restaking marketplace flow more efficiently. Cool, and let's get started. So, restaking is really an appearance glance. As a staker holding quality assets like Ethereum or Bitcoin, you are already earning a base yield or market beta. By taking on additional slashing risks, basically, particularly in a, say, delegated proof of stake DPoS system, you can earn extra rewards on top of your existing staking returns. And this is a really sort of enticing opportunity, really no-brainer, honestly, especially when the service at the very end aligns with the Ethereum's high standards, right? So for restakers, taken from the restaker's perspective, restaking essentially offers them leverage, increasing your risk-adjusted return, provided that you understand the investment risks, right? And the understanding is, this risk understanding is very crucial, as we'll explore very shortly. And but from the other sort of perspective, if we're looking from the service perspective, this is actually where I believe restaking becomes vital to our industry, right? If we're talking more broadly or philosophically, in this sense. I recently watched Gelato's founder Lewis actually appearing in your show, The Rollup. Lewis discussed the evolution of services in Web 2. basically, in a nutshell, in Web2, we witnessed a significant evolution in service hosting and management. We started with local hosting, which was incredibly painful and inefficient. And this led to the rise of managed services like AWS and GCP, which provided virtual servers and alleviated much of the infrastructure management burden. But the industry then kind of progressed to even more specialized, vertical specific managed platforms, such as Vercel for front-end hosting, further simplifying development and deployment process. But there's a problem that in Web3, this is hard to achieve and really presents a unique challenge. The solution for Web3 isn't a single managed platform to host many services, as we've already seen, in Ethereum's case, I guess, which this approach we've already seen has led to a lot of the common pitfalls of a monolithic architecture. The fundamental issue is really that we can't horizontally scale our underlying infrastructure while maintaining decentralization in the same way our Web2 counterparts can, right? So how do we scale in Web3? The only viable path that actually aligns with the channel's name very, very well is that we need to keep things very modular, right? We need to keep things very modular and, in a philosophical sense, hyperscaling the quantity or the actual numbers of different services. And we've, in fact, already made significant progress on the technical aspects, right? Innovations like ZK proofs and a variety types of rollups. Really makes it easy by the day to launch and scale services. But other than the technical aspects, right, there is another crucial piece of the puzzle or equation that hasn't received as much attention, which is really the economic and incentive portion of the equation, right? Until now, we've generally assumed that, these services, whether it's a rollup, whether it's an app chain or whatever, to follow the centralized first and decentralized later pattern, which is kind of hard for the ecosystem to grow, right? And this approach often requires, these projects raising enormous amount of capital, sometimes up to a few $100 million before launching the actual product, right? And the effort involved in the cold start process, assembling support from the operators and the stakers is immense. And this cold start problem of decentralized service really poses a very significant barrier to innovation and growth in our space. And this is where I think from a sort of, I guess I mentioned this already, the philosophical sense where restaking can be truly transformative. It's not just a tool. It's, obviously a tool for enhanced yield for the stakers, but it's also a way to hyperscale the sheer quantity of services, which is very, very important. And by lowering these entry barriers and providing a ready pool of economic security, along with those operators basically standing by to operate your service, restaking could really enable a proliferation of new services and ideas, right? And the beauty of this approach really lies in the numbers, right? It's much easier to generate one good service out of 10,000 competitors than just 20 services in total. And by enabling simply the sort of more services to launch and compete in our space, we create an environment where truly innovative and efficient solutions can emerge and thrive. May the fittest win, if we're quoting Darwin. So this restaking model could fundamentally change how we approach the creation and scaling of decentralized services, right? It democratizes the process, allowing for more experimentation and innovation, and creates a natural selection mechanism where the most valuable and efficient services will attract more stake and flourish. So how are we going to design this thing, right? Obviously, from the previous slide, we are only seeing the very simple two-party exchange over here. And in order to really fully realize what we want to do, or what we want to achieve here as an ecosystem, or to unlock the full potential of restaking, right? connecting the stakers with valuable assets and funneling them to bootstrap services. What we really need to do is to design a well-coordinated marketplace. I think if you guys have heard about Sriram talking about this, coordination is something he mentioned very often. But traditionally, we've been doing this, in the traditional sense, we've been doing this quite manually through extensive business development work in the sort of previous staking operation landscape, right? And now what we want to do is essentially replace all of these human labor with the invisible hand of the market, right? So we need to kind of like basically, to boil it down, we need to have a market that runs itself and ultimately produces the efficient frontier where every party are working with each other in a very efficient manner. But first, let's actually introduce some players who are participating in the ecosystem for those who doesn't know, right? And first, we have the operators, which is a new concept. If you are not familiar with restaking, these are the entities that run the services, ensuring very smooth and efficient operation of those services. And they form basically the backbone of the restaking ecosystem, providing the technical expertise and infrastructure necessary to keep services running. And stakers, we've already talked about the provide committing their assets to provide security to operations and by extension to the services. And service consumers, actually, while they might not fit neatly in our chart, they are a very vital sort of participants to the overall system. These consumers generate revenue for the services over to the right corner, and which in turn contributes to the return of the stakers can earn. Without service consumers, the entire ecosystem will lack a sustainable source of value. And on top of this, the restaking space right now is actually incubating another very important role that I think people tend to generalize a little bit, the strategy managers, right? Currently, all of the liquid restaking tokens or the LRTs or even operators are actually a very crude form of strategy managers. As we delve deeper into the inner workings of the restaking protocols, we'll see that the complexities grow dramatically, and the current sort of strategy manager landscape will change dramatically because of this. And this increasing complexity really makes the role of sort of strategy managers very important, right? These entities will help stakers navigate the intricate landscape of restaking opportunities and optimizing strategies to maximize return while managing risks, right? As our ecosystem matures, we are likely to see, more and more modelers and strategy managers in this emerging in the space and creating sophisticated algorithms and tools to analyze and optimize the strategies. They're essentially the market makers in the restaking marketplace, right? The people who bring efficient frontier to the market. And ultimately, right, with these participants, there are lots of complexities, right? But I think it's both a challenge and an opportunity. It opens up really a lot more new avenues for innovation, specialization, and value creation within the entire Web3 space. And as we move forward, understanding and leverage this complexity will really be key to realizing the full potential of restaking, not just from a very simple narrative, a derivative that helps asset holders to create more yield, but also a powerful tool that could potentially really shape the future of our space, right? So hopefully that's kind of like a brief intro about restaking. And what I want to do now is actually breaking down some of the different incentives among the player, right? Because unlike traditional two-sided marketplaces where participants' incentives often align pretty naturally, the restaking marketplace presents a very unique challenge where the incentives of stakers, operators, and services, even token holders, can seem very disparate and sometimes even conflicting. So we must ensure that all participants' incentives align and that many incentive parameters are transparent to everyone in the ecosystem in order for the marketplace to work as a whole, right? So if we're breaking things down, stakers, they probably have the most simplest incentives. They're basically driven by the pursuit of higher risk adjusted returns, right? They aim to maximize their yield relatively to the risks they're taking, and so they're constantly evaluating and balance between potential rewards and the possibility of slashing or other penalties from these services. And for the operators, they have a completely different set of priorities. First, they need visibilities to attract stakers, very robust security measures to protect the assets, as well as make sure the services are running on top of their machine are running smoothly, and a very smooth onboarding process to reduce the friction from the both stakers as well as the services, right? And moreover, I think operators seek fair compensation for their work, which is right now, I would say, missing in the current ecosystem. This sort of fair compensation is really kind of generated from the differences in terms of the hardware, the managerial capacity, the DevOps capabilities, right? An operator running a home PC versus a very elaborate sort of server warehouse would definitely mean that they're seeking different levels of compensation, right? So this diversity in operator profile kind of adds another layer of the complexity of the ecosystem, and really is the main driving force that we're going to be talk a lot about today, which kind of give birth to the operator quorum or operator sets design. And finally, the services, what they face is perhaps the most challenging set of incentives to balance, because they are first grappling with the classic, co-star problem. They need both economic security and a sufficient number of operators to function effectively. But attracting these resources is pretty difficult, without an established track record. And the services must design, payout system to consider both their own token revenue as well as the revenue that they give out, to properly reward the pretty diverse operators that we've already said, right? And lastly, we have also the overarching need for native token utility, which is vital for the entire ecosystem's long-term viability and profitability, right? Because right now, people are essentially trading the economic security with their own native token utility, right? But without the strong token utility, services may struggle to grow and remain sustainable. And these token economy must be carefully designed to, provide value to holders while also serving the restaking system's functional needs. So, so previously, we've already mentioned briefly that all of the incentives that we outline here are essentially coordinated by these services, and a lot of the value of these services are actually generated by how well they coordinate the development with the entities of, say, stakers, institutional LPs, or the operators. Right. And this is also why sort of it's very expensive and inefficient. So the restaking market is, the restaking market is also very kind of difficult to realize, unlike your traditional sort of online swaps, because there are actually physical handoffs, right? So actual software needs to be ran on physical hardware, and tangible rewards need to be given out on a daily or even hourly basis. So it's more like your traditional commodities market, where the handoffs are still happening today. For example, if you're exchanging oil, right? So those also need to be considered when we are designing this marketplace. Yeah, so this is kind of like a brief overview of different entities and what they kind of want, and they are all going to be boiling down to effectively how we're going to design this coordinated marketplace, and how we want to make sure the marketplace runs smoothly, efficiently, and minimizing sort of human intervention, right? So today, we're probably not going to cover all of the tiny details of restaking, but we are going to go pretty deep with the operator quorums or operator sets, which personally I believe is one of the most important or crucial aspect of restaking system. So if we are thinking basically from the first principles, right, how can we possibly cover or make sure all of the participants in the ecosystem work as intended? How can we orchestrate this experience and orchestrate this marketplace to make sure that the information, the asset, and the physical handoffs of software, hardware, and the management of all of these going smoothly? And this is where I think EigenLayer really puts the initial focus right. Given the challenge of coordinating all of these participants, they've chosen very wisely to prioritize building a very robust architecture to support these services first, and at the same time, potentially leverage their reputation to attract initial liquidity or TVL to the protocol, right? So we'll probably put aside the liquidity aspect for now, and those are more like a business discussion and business strategy discussion. And let's focus on the incentives of governing these services and operator relationships. Particularly with this operator quorum design. So, earlier we talked about the seemingly conflicting incentives of different participants, right? Operators seek fair compensation that reflects their capabilities and resources, and services conversely, need a tiered network with diverse node types or service level agreements to meet their varied requirements, right? And the operator's quorum setup pretty elegantly addresses all of these needs and offering a very flexible framework that accommodates both operators and the services. In a nutshell, really, the operator quorum design allows services to experiment with various operator, reward, and slashing designs. While this flexibility caters to diverse service requirements, it also introduces pretty complex reward distribution, as we'll see in a bit later. So to better grasp this concept, consider each operator set as a very distinct SLA or node category, similar to how a typical layer one blockchain or your rollup have different types of nodes, right? You have sequencers, you have bundlers, or whatever. Usually these services also have a very, very diverse types, right? And this tiered approach basically enables services to tailor their network architecture to their specific needs. And the system's complexity becomes evident when we consider that each quorum has unique characteristics, right? As we shown over here to the left, one service might have multiple operator quorums, and within that operator quorums, we have multiple operators. And within that operator group, we have multiple assets and multiple stakers. And for the individual quorum, we also have SLAs. So it's a very nested architecture, right? From a service perspective, obviously, this setup is ideal, right? The operator can have different tiers of, say, we have 3 operator quorums for 3 different types of nodes. And for operators, it's also quite intuitive, because then I can look at each operator quorums and see the requirements. If I don't fulfill it, I don't join it. If I fulfill one quorum, I go into that quorum, right? But what actually this creates is extremely hard user experience for the stakers, right? These stakers decision-making process is no longer as simple as choosing an operator based on reputation or promised returns. These stakers actually now need to consider the specific quorums an operator participates in, and the unique risks and reward profiles of each quorum, and operators' potential involvement in multiple ABSs, right? Spreading the risks across different services and quorums. By now, you probably already feel like everything is entangled and hard to make sense of. And this multi-dimensional risk assessment significantly, complicates the staker's decision. It's no longer about evaluating things in isolation, but basically every aspect interacts with each other within this marketplace. And the complexity introduced by the operator quorum system really underscores the need for sophisticated tools and strategies we talked about to help stakers navigate this landscape, right? And because we potentially need several different types of roles to help not only stakers and operators to manage where their stakes are going to. But ultimately, the point to drive home is that, even though looking at a staker's perspective, that this is extremely convoluting and extremely hard to understand because of the layered situation, they kind of underwent a very important process or important decision-making process from the restaking protocols that operator and service handoffs are being prioritized, and that restaking as a system can accommodate multiple variety of different services such as DA, Oracle, co-processors, each with different types of needs for their underlying network, and being able to have operators sufficiently supporting these different variety type of networks. So I want to kind of like show you guys a few evidence of the operator quorums and the direct outcome of different operator quorums, right? This one is from EigenDA, which is actually the only sort of concrete examples of SLA and operator quorum design. Although even being the first, a lot of it isn't in effect still. There are still plenty to build, such as watchtowers for a variety of service types, operator data availabilities, and more. But what's already visible is the tier design for quorums, right? For example, over here, you're really seeing 4 types of different quorums, each with different SL service level agreement attached to it. And while you're not actually being slashed, as slashing is not available, there is a forced eject condition where you stop earning rewards since you're no longer operating or considered as an operator for this particular service. In this case, EigenDA. And for the operator tiers, in our case, it is determined by your stake, your share of quorum stake, and the eject criteria, on the other hand, are governed by your availability. And and the direct sort of result of the operator quorum is that I think this is kind of like oftentimes misunderstood aspects of our current restaking landscape is all of the assets seem to be the same, right? If I'm staking native ETH, if I'm staking Eigen, if I'm staking, even sort of STEs, those are all pretty much being treated equally across the board. But if we dive very deep into the actual APY for each specific asset, and basically distilled from different operators that this is EigenDA, by the way, EigenDA has set up, we've realized that while Anchor ETH only has a 0.03% concentration in the entire EigenDA's total stake, it receives the highest APY out of all of the quorums, right? All of the stakes. And native ETH and even the Eigen token on the hand currently receives no rewards, right? Obviously, right now, the situation is a little bit skewed as most of the stakes are in there to farm points. But, this kind of like just show you guys a very slice of how market is functioning, or how operator quorums are generating rewards, and it certainly doesn't treat all of the stakes equally. And so, the APY and ultimately the reward is a function of a quorum, right? The APY is really determined with the three factors that you've made your decisions on. First, obviously, the service, and second of all, the operator quorums. Your delegated operators are opted in. And operators certainly play a kind of like a major influence in this, and it kind of decides which operator quorum they want to be in at. And finally, the type of assets that you put into each operators. So there is a chain effect similar to, if you know, like calculus, there's like a chain rule, right? This is a very similar thing that we're looking at here. Each layer affects the next layer and ultimately affects your final reward distribution. And those reward distribution can be night and day, right? If you put in the wrong asset into the wrong operator, into the wrong quorum, and ultimately into the wrong service, even though the service might generating 100%, say 100% of APY, you might still get 0% at the end of the day, right? So this is why sort of the operator quorum, although being very neglected at the current stage because of the complexity, I would say, and because of the sort of the nested nature of it, extremely important for the actual users. And I believe that we as an ecosystem should give it more attention as we sort of march further down the road in terms of where the ecosystem is going. And I guess one final evidence is directly sort of coming down from the operator quorum and the APYs and the sort of the diversity of the APY for each different assets, right? What we are really seeing as a generalization of the current state of the restaking marketplace is that this mismatch of, on this graph, just the TVL, the economic security, and the APY indicates that the market is functioning very inefficiently, right? There should be a very positive correlation of your economic security and your APY that you're generating, because you are rewarding in theory all of those TVL that are staked underneath you. And you are, as a service, you should be actively managing exactly how much TVL that you have versus how much revenue that you generate for these TVL. But since we're not seeing that, the only sort of reason behind it is that we are still at the current moment, the Q4 of 2024, we're still looking at a very inefficient market where lots of significant amount of hand holding and behind the scenes movement and business development work occurring that is not just being automated, right? Not being handled by the so-called invisible hand of the marketplace. So there are obviously still a long way to go in the future, and I have sort of basically a few ideas in terms of where we will be going, right? Obviously, the base case for restaking is it functions as a very simple derivatives for your sort of blue chip assets, and that can be it for restaking, right? Obviously, this is the very bear case for restaking itself. But if we want to really take restaking to where we want it to be as an ecosystem, I think the four things really needs to happen. Before that, I think up until this point, EigenLayer has done a pretty good job in terms of nurturing and building out the protocol and ecosystem as a whole, right? and we as an ecosystem focus primarily on the engineering aspects, building out the core protocols, ensuring the basic mechanisms of restaking works, and onboarding initial services to test the system, so on and so forth. But I think we are actually standing at a very interesting phase where, this phase signifies the change from being builder-centric as a restaking protocol to becoming governor-centric to foster a marketplace, right? And the market's governance must begin, to allow those so-called invisible hands and really the participants to make individual informed decisions, right? With decision making, we can slowly start to see that the marketplace functioning as intended. And aside of this sort of more broader aspect, I think the first thing that we as an ecosystem needs to focus on is starting to establish the open standard and data coordination, right? Data is the lifeblood of any market, right? It drives decisions, transparency, and competition, right? In the case of EigenLayer, data becomes even more crucial just because of the sheer decision-making factors and coordination points across these participants, operators, services, and stakers, right? Without accurate and openly accessible data, similar to, the APY data we actually just got to see from like a few weeks ago, nothing can really function properly because people don't get access to the important, parameters that informs their decision. So the first, I think, and the most important thing that we need to establish very quickly is actually the data, right? The open standard and the implementation of the data systems. And the second thing is really with the data, we can then see open competition for revenue and slashing. Up until now, for the past maybe a year, many services, are technically being operated in something of like a incubated environment, right? It's protected, it's nurtured, it's allowed to grow. There are a ton of resources pouring into each, basically hand-holding them to grow up. And while this is very necessary in the early stages of the restaking ecosystem and for those projects, right, I do think that it's time to start embracing open competition, right? We need to foster a more dynamic and competitive ecosystem where services can compete for revenue and slashing conditions, and true value is really discovered through competition, remember, from the very early slides that we talked about. And without it, we really won't identify the services and operators that brings the most value to the ecosystem. One area I think we need to be very cautious of continuing to do is to baby these services, right? Allowing them to, or even kind of some conditions to allow them operate in a very protected environment. I think as the market matures, we really need to let the competition thrive. And this is how true innovations of value brought forth, right? And the third thing, which is, I guess, an observation instead of where we're going, is that specialization and the sophistication of different roles, more specifically the tools and assets for strategy building, for strategy vaults, right, are going to emerge very soon. We are already seeing a lot of the emergence of more sophisticated roles within the ecosystem, particularly around strategy management. And much like how traditional markets have specialized traders and those asset allocators, we'll see a rise in potentially high frequency traders, strategy managers, and other specialized participants within restaking as well, right? And I think they are extremely important in the space. So for this to happen, we really need to provide the right tools and infrastructures to support these roles. Right now, one of the key problems with our restaking ecosystem is that everything is diversified and everything is chained, right? Operators are simultaneously opt into, say, 10, 20, or even all of those services because, points are being given out by all of these services. But it's basically similar to how in a traditional stock market, the only tool you have is ETFs instead of individual stocks, right? So we do really need to have a sort of some type of base assets for these strategies to work with. And we'll talk more about it as we go into the specific sections where EigenExplorer is doing some of the initial exploration in this regard. And finally, I think it's really the composability of restaking focused finance, right? Restaking has been branded as many things, right? It is a derivative in itself. It is a launchpad for these services, and it is, as we talk a lot about today, is a marketplace, right, for decentralized services, right? And I really do think that if we're taking from a market's perspective, if we're taking from a decentralized marketplace perspective, it is crucial for us as an ecosystem or as a community to start building composability, right? Or to building on top of the restaking protocols. And this is the only way that we can foster a positive change and the more efficient market exchange within the ecosystem. The more sort of EigenFi or restaking Fi projects there is, the more liquidity that comes into the system, and the more sort of utility that goes all around, right, through the participants. So up until now, I think we've basically covered the broad aspect of restaking and the tiny details of restaking, right? And now I want to talk a little bit about what we're doing and here at EigenExplorer, right? So basically, for us, we're focused on two important aspects. The first is the data, and the second is the composability of the ecosystem. So we're currently the largest restaking-focused data provider for ABS operators and stakers, and we serve thousands of different parties accessing restaking participants' data. From tracking, when our particular whale staker delegated to an operator, to monitoring the specific operator quorums and sets and their individual reward distributions. Oftentimes, people ask, why do you guys care about data so much? Because we really do think for a system like restaking, data is the cornerstone or the foundation of everything else, right? And it's absolutely essential in terms of the exchange of so many different participants in our system. And if you're familiar with, say, ancient Rome or Greek history, it's pretty comparable to how governments establish standards for silk or other commodities and even money in the first place. Then to see the boom of the market and eventually the prosperity of the nation, right? And in our language, data is basically the equivalent of the standard that we have in the very, very past. And the second portion of our product is essentially a DeFi component designed for restakers, aiming to improving market usability and exchange while fostering economic ecosystem composability, right? We really do believe that, choosing an operator, although it's the correct sequence in the market exchange loop, is challenging for consumers, right? And just from the sheer number of decisions that you need to make in the ecosystem, we believe that we want to start with just the sort of the most basic needs from the staker, since it's the easiest to solve. And as mentioned earlier, restakers primarily want to earn yield. They do so by understanding the services in which they want to share risks, right? So we've designed a system called direct liquid restaking, where users can directly stake all of their state assets into one ABS and sharing only that ABS's risk and rewards. And we achieve this through a step that diversifies across operators with a mechanism we called service contribution threshold, right, which measures how user stakes are being utilized or put at risk for a given AVS. And because of this constrained risk and reward exposure, other protocols can actually build on top of this to create more elaborate strategies, so that protocols have a stock-like asset to work with, instead of every single strategy making decisions needs to source through all of the operator quorums, source through all of the staking distribution. Be automated, basically automate that and diversify across operator to completely mitigate those risks from the operator's perspective. And so don't want to bore everyone with just going over the list, but really with this sort of the direct liquid restaking design, what we want to achieve is that users as a staker or institutional staker, they get direct exposure to an AVS, whether it's connection with that AVS, being a part of the community, or in the sense of risk and reward, right? And we do that with a much improved user experience by basically decreasing the number of decision making you need to do. And second of all, this design really allows for a more elaborate asset management schemes to be built on top of EigenLayer or the other restaking projects. Basically, strategy custodians and other EigenFi projects get a base asset to work with, alongside with the isolated and accurate risk and reward profile. And that's what we are currently working on, and we're super excited to see these aspects slowly but surely, I guess, bring out to the daylight, and seeing the entire sort of market wheels slowly to start cranking. And personally, I think we're very close to that day. And so that's pretty much it about today's presentation, I guess. And for anyone interested, this is our website, and feel free to check it out.
Awesome, Liam. I mean, that was a fantastic overview of restaking, and a deep dive into the EigenLayer mechanism as well, the market participants when it comes to stakers, operators, and services, and the incentives that play for each of those. I do have a couple questions, but I mean, that was an awesome presentation. So I think questions are probably pretty quick here. I want to jump back and basically share with you one thing that I learned today that I'm not sure is common knowledge amongst the people in the industry, which is these couple of slides here. So this slide, yep, this one, and basically that we have. So rewards are not created equal. Like this idea that I could be staking into an AVS, but because the asset that I stake is a little bit different, or a different form of ETH or Eigen, or a different token, different asset, it doesn't receive the same sort of rewards from the AVS. And so I think this shows that there's an extra degree of choice or decision that has to be made by the stakers. So this choice, coupled with all of the other choices that are at play, like you mentioned, the operators, the operator quorums, most of the stakers right now are just delegating to the liquid restaking token. They have maybe just some ETH. They get easy ETH, they get swell ETH. They kind of stake their ETH into these liquid restaking tokens. And then all of those decisions are made on behalf of the staker by the LRT DAO. They're allocating amongst the AVSs, amongst the different assets, amongst the operators, and into the AVSs. And so I'm curious about, do you think that there's a paradigm shift here where right now in its current state, stakers, because there isn't a lot of information available, stakers are currently just taking kind of the more convenient path and staking their ETH in these LRTs? Do you think as more data becomes available, and you guys are starting to help proliferate, more information about the EigenLayer ecosystem so that it's publicly available, do you think stakers will take more of that information to make their own decisions about which AVS, which asset, which operators they stake into, and they'll make more of those decisions themselves rather than delegating all of their ETH to an LRT DAO and entrusting the LRT with making the decision for them?
Yeah, Ravi, that's a excellent question. I think, I think things are going to be a lot nuanced than this current two state that we have. Either you stake on EigenLayer's dashboard by operator delegation without too much information, right? Basically, blindly trust EigenLayer or these operators are going to make the best decisions for you, or you go to LRTs and let them handle everything, right? I think what's going to happen is you are going to see a stratified approach where the role within an ecosystem is going to become very diverse, right? So you have potentially a vertical focus LRT, right? That specifically helps you to make decisions for a particular sector, for example, DA, right? Because bear in mind, not only the assets are not created equal, the services are not created equal, and the operators are not created equal, right? So we're really looking at a 4D chess right here for the restakers. And what I think is going to happen is, for a very sort of trained or restakers or institutions that knows what they're looking at, they're going to want tools that help them to make their individual choices, because that's the way to maximize their earnings, right? And for your average Joes, or someone doesn't want to really go into every single aspect of it, we will see, for example, potentially just simply helping users to diversify across an operator, which is something that we currently designed, into one specific AVS, because that's kind of like a very logical loop where I am the staker, I have the asset, and I want to stake into a service, just like you use your Lido, or you stake into any other services. We're just making it more similar. It's basically kind of like an app store where you can choose to stake in multiple services instead of one, right? I know there are lots of projects emerging to create vertical specific strategies and very degen yield maximization strategies. So basically the point is that I don't think right now it's a very black and white situation where you don't have many choices, but eventually what we're going to see is the proliferation and specification or specialization of different degrees of management within the chain of marketplace, right? And as a consumer, as a staker, you'll have basically different flavored products that tailor to your liking.
Makes total sense. I think this is part of the maturation process of the EigenLayer protocol and restaking in general. This is something that we're only just starting to see come to fruition. And so it makes sense. We start out very minimal degrees of freedom, really only black and white options. And as it matures, we'll continue to see more optionality for the participants to get involved. So I think this 100%. Was not only a great overview of how EigenLayer and restaking works today. I think it is a great insight and foresight to into what's to come for EigenLayer and restaking.
Absolutely, yeah. I think personally, I'm very bullish in terms of the whole restaking ecosystem or the restaking narrative, because obviously, like I said before, we can go very low as restaking is just a scam and it's another leverage products for ETH or BTC, right? Or Sol, right? Any arbitrary assets, as a matter of fact. But it could also mean a completely paradigm shift for decentralization, for Web3, in the sense that more services can actually be bootstrapped and be shipped to the market, whether it's an application, whether it's a middleware, whether it's infrastructure, it doesn't matter, right? And I am more inclined to believe that the latter will eventually prevail if we kind of going towards that direction. And certainly, I think for us, we are going to help shape out a significant portion of that equation. And it's also not really just about EigenLayer, right? Restaking is a coordinated system of all of these participants, right? EigenLayer obviously initiated it and built the initial architecture for it, but so much work needs to be put into it. And I really hope to see more people kind of jump into the wagon and start to see its potential.
Yep, couldn't agree more. Liam, thank you so much for coming on, and thank you for your presentation.
Yeah, thank you, Robbie. Really enjoyed this, and hopefully we can catch up soon.